Thanks for clicking. The Toronto Regional Real Estate Board released its sales data for the month of February this morning, showing a tightening market 1 year from peak. The data comes as multiple predictions are being made for Toronto's spring market, with the board releasing its 2023 market outlook, which predicts a strong second half of the year.
Gonna be amazing!
However, and we hardly ever see this, Remax has also issued a report on the Toronto real estate market, saying that with the impending economic headwinds, meaning potential recession, and the potential increase in the number of sellers, the second half of the year may not be so strong.
We're gonna get fired.
So what I want to do today is go over February's real estate data, take a look at the 2023 market outlook, contrast that with the predictions being made by Remax, and then discuss what to look for next. The Bank of Canada is set to make its interest rate announcement next Wednesday, March 8th, and any announcement will obviously have a big impact on Canada's real estate market going forward. We'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Under the data, first off, the benchmark price. The benchmark price, that's the price of a home, which represents the most popular set of features. The benchmark price in January was sitting at $1,078,900, and that bumped up a little over $12,000 to $1,091,300. So we have a little over a $12,000 jump in the benchmark price in February, but the average price of a home jumped up quite a bit. The average price of a home in January was $1,038,668, and that bumped up to $1,095,617 in February. So we have about a $60,000 jump in the average price just in February. The median price of a home also jumped up in February. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under that price. The median price in January was sitting at $900,000, and that jumped up $40,000 to $940,000 in February. And despite all of these jumps in prices, we're also seeing more inventory come to market. If we look at the months of inventory measurement, that's where if no more homes came to market, how long would it take for Toronto to completely sell out of homes? The MOI, the months of inventory, was sitting at two months of inventory in January, and that bumped up to 2.2 months as of February. And then finally, the sales price to list price ratio, which measures how much a home sells over or under asking price, that measurement was also up in February. The SLPR was sitting at 98% in January, meaning that on average, homes were selling for 98% of their asking price, and that number bumped up to 100% in February, meaning on average, homes are selling for their asking price.
Worth every penny, bro.
So, in summary, we have the benchmark price up over $12,000, the average price up close to $60,000, the median price up $40,000. We have 0.2 more months of inventory coming to the market, and homes are selling much closer to their asking price than they had prior. And a lot of these price increases can be attributed to the lack of supply. Sales were down almost 50% from a year ago, and new listings were down 41% as well. And according to the 2023 Market Outlook published by the Toronto Regional Real Estate Board, the number of listings coming to market, the amount of supply on the market, isn't going to be getting any better anytime soon. At least not for the first half of the year. According to the report, home sales are expected to remain flat for the first half of the year, as economic uncertainty, meaning the impending recession, and higher cost of borrowing take their toll on buyers' intentions. With that said, although potential home buyers are concerned about the economy and the higher cost of borrowing, the number of potential home buyers in 2023 are up 2% compared to the potential number who were polled in 2022. So according to the Ipsos poll that was commissioned by the board, there are more potential home buyers going into 2023 than there were going into 2022. And as such, the report predicts that in the second half of the year, as the economy proves to be much more resilient, and as fixed mortgage rates continue their downward trajectory, we should see a return of home buying activity to the Toronto housing market. It is worth noting that this report was published back on February 10th, back when fixed mortgage rates were trending downward, and with the increase in bond yields that we've seen since then, that's no longer the case anymore. Regardless, the report says that home buyers will come back to the table in the latter half of 2023. But what about sellers? The report admits that listing inventory will be a problem throughout 2023, which makes sense. Unless you have to sell, why would you sell your home in a declining market?
I need money.
The board found that listing intentions for detached homes were at their lowest point since the board began their polling. Meanwhile, the portion of respondents who own condos or semi-detached who might consider selling their homes was up from last year. And with the report predicting that any economic downturn will be both shallow and short-lived, it argues that we shouldn't see any sudden abundance of supply, any widespread panic selling that would lead to a decrease in prices. Not only that, in the absence of widespread panic selling, the board says that with the economy improving in the second half of the year and buyers returning to the real estate market en masse, we should start to see more upward pressure be put on prices in the second half of 2023. So, in summary, the report says that with fixed mortgage rates heading down, they're not, and a resilient economy, which remains to be seen, we should see a strong second half of 2023 as buyers return to the market and prices shoot back up. In contrast, however, Remax argues that the first half of the year is going to be the best time for home sellers, due to less competition and the economic headwinds heading into the second half of 2023. What Remax is essentially saying is that sellers may have a better time in the first half of 2023 than they will have in the second half, as in the second half they might have much more competition, much more sellers selling their houses. If home sellers would be better off selling their homes now, as Remax is saying, then it would naturally follow that prices are expected to be lower in the second half of 2023.
This is treason.
Now granted, this is still a call to action on the part of Remax force home sellers to get into the market now rather than later. Get in while the getting is good. But you very rarely see a prediction like this, a prediction coming from a real estate brokerage that prices are going to come down in the latter half of the year, especially from a real estate brokerage that just in December of 2022 predicted almost 0% price decreases in 2023. So, on the one hand, you have the Toronto Regional Real Estate Board predicting a strong second half of the year as the economy proves to be much more resilient. And on the other hand, you have Remax arguing that sellers should sell their homes now, as they could have much more competition in the second half of the year due to a worsening economy.
One mouth, two ears, listen to each other.
And to a certain extent, both the Real Estate Board and Remax are correct. Weird day. The future of the real estate market in Toronto, in Canada-wide for that matter, is going to largely depend on the path of interest rates, on the inflation rate, and on the functioning of the economy. If continual rate hikes coming from the U.S. Federal Reserve and potentially the Bank of Canada cut deeper than some are anticipating, and we have a much more deep recession, then that is probably going to have a major negative impact on the real estate markets going forward. If the Bank of Canada is able to maintain its pause and we don't enter into a major recession, then we could see the real estate market stabilize later on in this year. Until we know what the central banks are going to do and what that effect is going to be on the economy, we really can't predict what is going to happen to the real estate market, not even 3 months out, let alone 6, 9, 12 months out. With that said, we will continue to track the Bank of Canada and Toronto's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.